Bookkeeping is hard until you build systems like this. Have you ever wondered what the best entrepreneurs in your industry are doing, the KPIs that they're tracking, or the strategies that they're implementing that are costing you money simply because you don't know what they're doing? Everyone is looking for a new strategy to push out for marketing, but they never consider how they should value their financial strategies. You can always look at paid ads, you can look at content, you can look at whatever marketing channel you want. But the one thing that we find that makes businesses stop scaling and miss out on a lot more growth is they don't know their numbers. They don't have the right financial systems and checks and balances in their business to improve and to scale sustainably. In fact, 82% of businesses go under in the first 5 years because of financial mismanagement. It's not even because there wasn't any product market fit. We see financial mismanagement as the leading indicator to whether a business is going to be successful in the long term or in the short term. I don't know a single business that generates over $1 million a year in revenue, which is only 83K a month, that doesn't have a strong budget and a strong financial system implemented. In fact, most of these businesses already have a controller or some part-time CFO. That's exactly what we do with our firm. We put CFOs into your business. If your books don't tell you what to scale or cut without these higher end consultants or operators, you're not going to know how to scale your business. You're not going to know what to scale or what to cut. So you need a financial system at least. My name's David. I'm a financial consultant, fractional CFO. I'm the founder of Green Mountain Advisors, and we've installed this system into companies generating at least 50K to even more than 500K a month in revenue. And today you're going to be able to copy this completely for free. We're going to go in depth on bookkeeping, showing you exactly what moves the needle for these businesses. So bookkeeping in general is seen as something that you can do later, but it's actually something that you want to get on top of the moment you start setting up your business. And that's because your business model depends on the validation of the prior month's data. So whenever you go into a business, right, you probably have some type of financial model. You can see what the return on capital is going to look like, where you need to allocate to marketing. Maybe if you're a first-time founder and you're just solving a product, like a product-related issue, you don't know all this stuff. But the bare bones of running a successful business depends on the financial foundation that it's built on. If you don't have bookkeeping to validate your thesis, why your business is supposed to be successful, exceptional, whatever it may be, you're just missing out completely. I don't know a single business owner that runs their company successfully without a strong financial system in place. This will keep you accountable. It'll help you improve stuff where there's a single source of truth, and that is your financial statements at the end of the day. This will give you clarity and help you improve your decision-making ability, and it will identify the biggest constraints in your business, and it will tell you what to fix. Because when your bank account hits zero and you're already looking for a loan or you're looking for investors, you've already lost. This is meant to prevent you from ever getting in that place in the first place. This will help you avoid cash flow problems, missing payments, bankruptcy, overspending, failed projects. You'll be able to track ROI a lot faster, and that means more money in your bank account for a longer period of time. It means more stability. It means you're going to be able to confidently reinvest back into growth without feeling like you're taking a gamble every single time every new month hits. Accountants are not actually prepared to grow your business with you because they're too busy working on taxes for their other 200, 500 clients, or processing payroll, or handling a ton of other stuff that goes into accounting. There's seasons where they don't do anything, like, oh, after the October 15th deadline, they all take a vacation, right? But when you're scaling your business and millions of dollars are coming in and out of the company all the time, your financial system is going to be the single source of truth for you. It's going to be your North Star metric, and you're going to have to know that you can rely on it. It's been stress tested. It's been battle tested. They don't actually want to do the work of budgeting and installing the right processes and systems because most of the time these accountants haven't done it. Most of the time accountants or bookkeepers have come from Big Four, or they've come from a industry where they were doing one specific process. They never did the entrepreneur's journey of actually scaling a business. And that's exactly what we do here. We're scaling companies with this financial system in real time. This is why it's so important before you go into scale mode to get your foundation right. And that means having the right financial systems. So what should bookkeeping be and what is it today. Today, bookkeeping is your revenue, your cost of goods, and then they'll say this is your gross profit. And then they'll say, okay, you have labor here, you have some expenses here, maybe you're spending something on marketing. It doesn't actually help you scale your company. You look at your financial statements every month and you're probably just like, okay, thanks for keeping me out of IRS jail, but how is this actually going to be a revenue center, not just a cost center for my company? And that's why when we do our financial systems, we look at things differently. We say, okay, what is your revenue? All right, let's break it down. Maybe your bookkeeper will do that. Maybe they'll go as far as breaking it down, but most of the time they don't, right? Because then once they figure out that they have to break down your revenue, then they actually have to start counting your accounts receivables. And that's even more work. And they don't want to do it. They literally don't want to do it. So you'll have like product A, and then you'll have service A, and then maybe you'll have like a product B, or maybe general, whatever. It doesn't matter. That's what your revenue is broken up into. What we do once we break it down with your accountant, with our team, whatever it is, once we break down exactly what your revenue looks like, we say, okay, like let's look at the need to have and nice to have portions of your business. What is your actual business model? What is the ratio of, for every dollar I get in revenue, what immediately comes out that I can't negotiate? Like I just need it to run the business. And this is where the biggest mindset shift happens, because now we're taking certain portions of our labor, maybe marketing, general expenses, and we're putting them up here. So then we say, okay, what are our direct costs of goods? That might be, a CRM or anything administrative. Maybe it's software. Maybe it's licenses. What are the direct costs of goods to running your business? Sometimes, what if you're running a restaurant or bar? It might have to directly correlate the costs that are part of fulfilling the revenue in the first place. Then we say, okay, that's our direct COGS, but then what's our direct labor? Who do we need in the company? Maybe they're a cost center, maybe they're not a profit center, whatever it is. Who do we actually need in the company to do the work? So that's usually fulfillment. That might be, I don't know, your customer success manager, whatever it is, right? In your company, we break these individuals out in your top line financial statements, because after you do this math, you get something called a contribution margin. And this contribution margin is the real revenue of your business. The contribution margin is the real revenue of your business, and it'll tell you exactly how well you did as a business the prior month. Before we start talking about how much can I reinvest into marketing, we need to know, is our business model, do the unit economics of our business, does it make sense? Like how long does it take to get paid in? Like 7 to 10 days maybe from a processor to getting payment, to how long does it take to pay these people? And then in X amount of days, how much money do I actually have? That's a financial system, because then, only then, can we figure out what we should do with growth. And we do the same thing for growth. Right below this, we'll say, okay, marketing. We need people to know about our stuff. Maybe it's cold outreach, maybe it's, warm outbound, whatever it is, right? Like there's a way to tell people that we have really good stuff. Like, hey, we have something that can help you, right? But it costs money for us to tell you that. So there's a certain investment that we have to do. And there's a whole bunch of unit economics that go into that process, and the best marketers understand this the most. Even the best marketers I've found don't split off their marketing department. Like you have direct COGS in your marketing, right? Maybe you're paying for OpenAI, maybe you're paying for UGC, whatever it is, you have direct COGS. And then you also have direct labor. All right, what is direct labor? You might have a video editor, you might have thumbnail guy, whatever it is, whatever you're doing for your marketing, there's direct labor that's associated with it, and there are direct COGS that you can't afford to not pay. And that will help you understand your ROAS even better, right? Because I've seen guys who have like a 10x ROAS, but then after we do this math, after we do the return of marketing compared to contribution margin on the math, it's like, oh, your 10x ROAS is actually like a 3-to-1 actual profit risk reward ratio. And that's really important to understand, because we find a lot of our clients come into the door and they say, hey, David, I don't understand how I'm making 50 to 100K a month from paid ads, but I seem to just not have any money left over at the end of every month. Like, where is it all going? What is happening here? I don't know what to cut. I don't know who to keep. I don't know anything. All I know is how to fucking make it rain, right? That's all it is with these people, which is totally fine, because they've never been taught the financial system that we use to scale companies. So the first thing you need to do in your business is really understand who needs to be there to make the sausage factory operate. That's the most important part. And then you do the same thing for labor, you do the same thing for marketing and sales, and then you go to your accountant or bookkeeper and tell them to modify the chart of accounts using this system. Once they've done that, you have something that at least can confirm what you're doing. Most of the time, we see people shooting from the hip when they're doing 30 to 50K a month, and we'll still work with those types of clients, but then the scaling that happens right after we install it is ridiculous. Like we've seen people, do 3 to 5x on their investment working with us simply because of that. So if your accountant or CPA or whoever you have doing this doesn't want to do this, come work with us, because we're going to install the system into your business in like 30 days, and you're going to make a ton more money simply because you have this. You're going to have all the risk reward metrics that you need to know that you can confidently reinvest your money every single month and ramp up a lot faster. If you like this video, if you want to learn more, I've got some more videos here, and you should sign up for a call and work with us, because we will scale your business. That's what we love to do. And using this system will make it far more effective and faster.